Hello traders, this is the bigger picture video. I'm starting it with the DAX weekly logarithmic chart, and in this video I will go through weekly and daily charts of DAX and also go quickly through weekly charts of US indices. Now this is the chart featured in the previous weekend video from Sunday, March the 15th, in which I said that this here was a bearish pattern and that the same pattern we do have now. Back at that point in time, this green candle was the candle in play, and that was the close, while now we can see that we do have follow through. Now let's go to the usual weekly chart, which would be this one, and on this chart you can observe downside follow through below the previous week low, November low, and June low from previous year. Now we do know that index or CFDs as index clones and futures went below this, and it actually the price was all the way down to like 22,070. And the issue here when we are speaking about downside supports and where this could go is that we are looking now at this part here, which was made on emotional selling and then on rip your face rally, relief rally after this event, which was on tariffs, and both down and up move didn't really left in this part any kind of usable supports. So that's the number one issue here of two issues. Second issue is everybody can now make a fib like this from April low, and observe that Habeck is basically at 22,000 sharp. But that's not really true, because April low actually wasn't on 18,490. This was just a calculation of the algorithm calculating the opening price and low, high, and everything of that particular day of April the 7th, 2025. But we couldn't really buy DAX anywhere from 18,490 to 18,810, which was the tradable low. Now between these two prices is 320 points, which means when you make a fib like this, that halfback on this price is here, while when the difference is 320 points, it's going to actually be like this, like 160 points higher, because again tradable low was 18,810. When we go to observe this day, which was a historic day for German DAX with 2022 points, which means almost double the size of the big day we just had yesterday on Friday. Friday was a humongous day, but April 7th 2005 was 2 times that. And this is how it was looking on 30-minute on futures, and this is 5-minute on futures. You can see some of the usual things here, again and again and again, and here, and this also. But let's go to the next screenshot. It cannot be different than this, because in this part here I had to squeeze those 2,000 points, and the market that went through like 30 zones. But this is here important. This was the opening candle, and you see that they went down, pullback, and made a lower low around 910. That was the index low, but that was 18,810, not 18,490. That's the point. Tradable low 18,810 once again. Now let's go on a daily chart and observe what happened on Friday. So on Friday we had a decisive close below this area of support, which now should work as resistance. That's 22,930 to 950, let's say. And as long as the market is below this, where we have level minus 10% from the all-time high, previous week low, November low, as long as below that and below this gap, sellers can be in control. Then on a downside, we need to find some confluences, and next big round number, let's say it like this, meaning down from the all-time high, would be minus 15% from the all-time high. It is right here in the next gap. and when we go down we can find another gap. But now it is time to go on a different chart, a chart with many more references, just to show you a few things there. I have circled some areas for which I think they're important, and I'm going to explain you why I think that. First area would be this here, the area in which DAX was in the after hours on Friday. Now, DAX is a instrument that you shouldn't be going against in the after hours, and especially on Friday, because on after hours it is much less volume and liquidity on DAX, and especially on Friday when trading desks are going home or regular trading hour session for US indices and equities. And therefore DAX is just going to go with US markets, and it is a bad idea to stand against that. And they went down to here. There is one of the untested closes, and the DAX went all the way to here in the after hours. This area is in line with that 22,160 a real halfback of the move. And also here you see that here was a previous consolidation, and so bottom end of that consolidation together with these levels, so this is a bit of a wider thing, obviously. Now minus 15%, and this gap here would be the next one, and then below that all the way down to minus 15%. Why? Because look at this area between minus 15% and minus 20%. What is here? You know, see this, boom, boom, boom. There's literally nothing useful between 20,500, let's say, to 21,700. So here is like 1,200 points of nothing useful is there. There was some level here for day trading, but this isn't really anything much, nothing to, you know, write home about. So pretty big area of nothing, 5%. Boom, 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 nothing is there. While here we do have a confluence of December 2024 high and minus 20% from the all-time high. So these three here areas are the ones which I think could be interesting if this market goes down. Now, so those are the downside targets. What is the risk for sellers here? The risk for sellers is literally headline risk, because we are now trading in a wartime, but this time this conflict is different, and I think everybody, including me, at the start misjudged that. I wrote in the morning notes when we first had that gap down, this first one, this one here, Monday, March the 2nd, that usually these conflicts with Iran and Israel involved, in the past they were like something that would last like 2 days up to 2 weeks, and it would be very soon over. It would be a scare, and everybody bought that dip and happy days. But now it's a different story, because Americans are involved, and because nobody could understand at first that this actually can last for much more time than before. And I think that's the reason why we only now and on Friday and this week had some actual downside acceleration on other markets as well, because European markets and Asian markets were leading the downside, while American markets were pretty much chopping around, having some sharp throws up and down, but not really accelerating to the downside. A second thing is oil, which is negatively influencing all markets. And when we are speaking about oil, there is obviously CL as or WTI American oil, which is something that should be looked for the US markets, which is ranging between 95 and 100, and there is Brent, which is something that is for example, European markets, and which is more like trending to the upside. And this week, not only DAX is having this huge big red candle, Stocks 50 got that, Stocks 600, CAC 40, FTSE, all European markets, all Asian markets China is having similar like this. Some other markets are having some different dojis or something like that. Only Kospi has the big green candle of all the markets. While if we go to other markets, S&P, I said that 2 weeks ago that it should be looked on the weekly chart, because 2 weeks ago they closed the weekly candle here, while on daily chart it wasn't really looking like much, but on the weekly chart was already showing a downside. The one that is still like holding is Nasdaq, which only this week take November low, while the one that I told you 2 weeks ago and 1 week ago that I fully expect it to go to this double top is Dow Jones, and Dow Jones could have 48 easily 48.2 fib retrace from the April low. This is a Russell which is now below November 2021 and November 2024 low and closed below. So all of these markets do have some downside potential, and basically the risk for sellers here is that headline risk, like Strait of Hormuz is open or war is over or something like that, which could then lead to sharp reversal or like oversold rally, relief rally, call it what you want. It's going to be new buyers and old money closing in short covering, and that can be a reaper then. But without such news, all of these markets do have some more downside potential. And here on a weekly chart, that would be that from daily chart, December 2024 high, which is in line with minus 20% from the all-time high. And this one here is between some interesting levels, while let's go back to that index chart between minus 15%, which is 20, or let's say 21,700, and 20%, which is let's say 20,400. This is like 1,300 or 1,001 and 200 down to this December 2024 high of points here in this area, which if market goes again now for the 4th time, and 3 times it was like boom, 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 then it could go through this area fast yet again. That's the risk here. And basically that would be it for this edition of DAX Recap videos. Again, as long as below, let's say 22,950 to be a round number, sellers can be in control for the next week, a week in which trading or economic calendar is very light. There is only interesting thing is flash PMIs, which I think is on Tuesday, and nothing else. So basically all eyes are going to be on the US administration, on Iran, and on oil. So that would be it. In the next video I'm going to go through the recap for Friday and reviewing this week.